The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. Victor Sperandeo. Now, Mr. Sperandeo is a famous trader. You may have seen him on the news before, heard him talk, read things he's written. And he is exactly right when it comes to this whole issue of emotions and emotional discipline. That's why we ask you to practice trade with us for months or years, however long it takes for you to figure this out. Get all of your emotions out of you as you do the practice trades. Make them as real as possible. But practice trade, practice trade, practice trade. Learn what those emotions are all about so you can dispense with them. It is emotional control as well as learning how to read these charts that's going to make it for you. And let me tell you, I come into this market every single day excited, particularly at the end of a month, beginning of a new month, because I look back and see all the money that I made in the prior month. And that is extremely motivating. Now, it's not that every month is going to be a great month, but I want you to start practicing and then evaluating yourself every single month on what you've learned, what you've done. The only way to do that is going to be filling out your trade worksheets, your daily market worksheets, your weekly market worksheets. You need those worksheets. They're available for free in the show notes. If you're not a subscriber, go to chartingwealth.com, sign up. We'll send you an email every single day the market is open. And in that email are all sorts of things. There are links to these daily market, weekly market, and trade worksheets. You also have available in our trainings. We actually show you how to fill those out and prepare them. And if you want to supercharge your training, that's what you need to do. Remember Pearson's law that says that which is measured improves. That which is measured and reported improves exponentially. What does that mean? That means keeping up with what you're doing and rating yourself and ranking yourself and following up and filling out those trade worksheets. That's the way you exponentially increase your training. If you want to get good quicker, then you're going to do that by making sure that you're documenting what you're doing and learning from it. There's nothing like on-the-job training and realistic training. I learned that in the Marine Corps. It's one thing to actually train. It's one thing to make it realistic training, where you're doing live fire exercises, real drills that are as close to the real thing as possible. And that's what we want you to do with your practice trading. If you're not getting in there and feeling those emotions by making a virtual buy, making a virtual sell, racking up what profits you would have made, instead of doing it for real and losing your backside and having no money to invest, or so depleting your emotional capacity to trade that you just don't do it. And there's really only a few ways that this does not work for you. And again, it's not based on intelligence. I just gave you a quote by a top trader who tells you that. I tell you that too. Mr. Soros would tell you that. Jim Rogers would tell you that. You can go down the line of people who have been successful in this, and it's not about your smarts, because there's nothing super intelligent about this. Think about it. Stocks can only go up or down. They can only go up or down. It's a binary decision. Is it going up? Is it going down? Is it that hard? It's a 50-50 chance. If you just threw a dart at a board, how do you improve on that? Think about it. You use the charts. In addition to the charts, you also have to make sure that you control your emotions, that you're not stupid, that you don't jump in on a silly-ass gold trade because it had gone up for a few days and you thought, well, what the heck, I'll jump in. I'll just flip a coin. You'd have flipped it and lost, as we'll see here in a minute. But again, it's controlling those emotions, fear and greed primarily. That's what you learn when you do these practice trades day in and day out as they present themselves. So the only thing that's going to determine your success or not success is going to be sticking it out and practicing and listening to us 10 to 15 minutes a day, every day. Now, I want to thank all my Patreon supporters. Thank you so much. Just sent out a very important email to you. If you did not receive that email, check your spam filter. If you do not see it in your spam box, then of course I need my Patreon members to email me, cw@chartingwealth.com. We just sent you our second quarter chart review and also a request for stocks and ETFs you want us to review in that special training we do for you every month, and the call-in number and information for next week's live question and answer session where we answer your questions, problems, and concerns as a Patreon member. If you're interested in becoming a Patreon member, simply follow the link in the show notes. You'll see it whether it's at the YouTube channel, Facebook, Instagram, YouTube, wherever it is, or if you're a subscriber, the link's right there. If you want to be a Patreon supporter, you can still jump in for this month's specialized trainings, plus the special quarterly chart training, the short chart training, the Bitcoin training, all the great stuff we have available for our Patreon members, in addition to all the free stuff we give out here every single day. So we appreciate Patreon supporters, especially because they help us be able to afford the bandwidth, the texting service, all the stuff that we do here for you on a daily basis. You want to help us out and appreciate what we do and get everything there is to get from Charting Wealth, become a Patreon supporter. Let's jump into these charts. I tell you, I am enthusiastic about this every day. You guys keep me enthused with your enthusiasm. I love getting the text messages about great successful practice trades you guys have done, whether it's the recent 6% gain that several of you got in the up move on gold, whether it was the up move on TLT, the down move in QQQ and SPY recently, all the things that we saw happen. So let's now first jump into the S&P 500. Of course, we saw that down move come to an end there the week ending the 7th of June, and we have seen things moving up since then. In fact, a decently up day for the day. Remember, we had a weekly vertical crossover. Didn't feel real good about it back on the 28th of June. Of course, that ended up being an up week, and so far, first day of this week, a nice up candle forming. Now, again, we don't put a lot of faith in that candle because it's only one day of a multi-day candle, but we see the price percent oscillator heading up, derivative oscillator now positive. Finally, it took a while, but it's now positive. We go from the weekly to the 2-day, and of course, the 2-day was already in a confirmed up move. We talked about what? You waiting to find a jumping in point for a potential up trade on the S&P 500. We don't have that in the Nasdaq 100 because the weekly chart is still in a confirmed down move. So we see that we've got a nice up candle. We had the latest candle finish forming on Friday, so this new candle is only the first day of the latest 2-day candle. But we see it up, price percent oscillator heading up, derivative oscillator still losing some upward momentum. Go to that 4-hour chart. Looky there. End of the day, just made a crossover. Boomed up in the morning, but you've been a fool to jump in first thing in the afternoon. Why? Because we didn't have a confirmed crossover. And what we had was a pullback in the afternoon. That's why we follow the rules. So what do we do tomorrow? Well, couple of choices. You can look at how the charts look after idiot hour, sometime around 10:30 or 11 tomorrow morning, or just wait and see how that morning candle forms. If it's a nice green up candle, you might consider jumping into that trade. If the market's still backing up, then just keep your powder dry and see what there is to see. If it's a big, strong down morning, it actually pull that blue signal line or the blue line back through the signal line. That's the price percent oscillator. But chances are it will settle itself out sometime during the day and give you a potential jumping in point for more potential up move in the S&P 500, up for the day 0.91%. So the trick now is finding a decent jumping in point if and when it presents itself. Nasdaq 100 booming 1.35%. Now you might say, wait a minute, you just said there wasn't a crossover. There's not a confirmed crossover yet. Why? Because the week hasn't ended. This blue line pulling through the red signal line, the price percent oscillator on the weekly chart on the Nasdaq 100 is just happening. Hasn't completed yet. Derivative oscillator still negative. We do have a green up candle forming, but that's just the first day of a multi-day candle. We don't call a candle until its time period's over, which means that wouldn't happen until this Friday. But wait a minute, Tom, there's opportunities. Why can't I just jump in? You can. You can practice, trade it, see what you get. The problem is when you don't have confirmation, there are all sorts of bad things that can happen. We'll talk about a little more of that when we look at what happened with gold. Okay, get to that in a moment. What do we see going on? The 2-day trend line, first day of the latest one, derivative oscillator still losing momentum. Price percent oscillator, however, heading up, and the candle is forming up, trying to push through that prior 2-day trend line. And again, remember, weekly still in a confirmed down move. 4-hour chart bumped up big in the morning and then pulled back in the afternoon. Still not enough energy to cross over going up. So again, be very, very careful. Now, those of you who want to go ahead and forerun the weekly trend, I mean, I'm never averse to you practicing things, but typically that can be very, very dangerous. But hey, I'm all for trying new things. See how it works 9 times out of 10, and we'll see what we should go with. So again, that's where we are on the cues, waiting for it to rotate over with a confirmed up move, which may be confirmed by the end of the week, but there's a lot of down moves over this week. You'll see that blue price percent oscillator pull right through the weekly signal line and still be going down. We've seen that happen time and time again. Let's go to TLT 20-year bonds. I pulled my trade on that earlier today. I made a little bit of a profit, but the nice thing was I would have had a loss if I hadn't made that profit because it actually went lower over the course of the day than my entry point. So I was glad that I did that. Kept hoping it would do something for me. Never really did anything near the 4% gain or so that I was wanting from it. So I went ahead and pulled it because I'll show you why. This week started off with the weekly getting very weak. And again, remember, once you make your decision to enter a trade on that 4-hour chart, you drop back to how strong your 2-day and your weekly charts are. Well, my weekly chart started off very, very weak. Red spinning top, open box red spinning top, derivative oscillator losing a fair bit of momentum. Just starting the week off. Go to that 2-day, it actually started crossing over going down. That's not confirmed yet, but it had already been super weak for about 4 days, and when it started moving even weaker, I just said the hell with it. I'll look for the potential of jumping back in, and guess what? If it pops up tomorrow and somehow before that candle ends things switch over, I might reconsider jumping in at some point. But you can see down in the morning, down further in the afternoon, I pulled my trade while still in the green. And of course, I didn't lose any money, made some money, but nowhere near what I wanted. But that's okay. That is all right. First rule of trading, don't lose money. Second rule of trading, never forget rule number 1. And again, when things work, fabulous. When they don't work, pull the plug. As George Soros told us some of those quotes last week, he has been successful because he's known when to give up. That is the key, is not to lose your ass. You lose your ass, things go away. Keep practicing, keep working. All of this will come to you. Remember, this is the sucky time of year, fall, winter trading zone. This is not a great time of year. I'm sorry, summertime trading zone. Fall, winter trading zone, great time of year. That's the time of year I focus on. That's what usually comes out of my mouth first. I can't wait for the fall, winter trading zone. We're in the summer doldrums. Why? Lots of volumes gone out of the market. Sell in May and go away. Live to trade another day. A lot of the big money leaves for the summertime. People go on vacation, do other things. aren't messing with the market. It means less volume, more volatility, more up and down, not making a lot of sense necessarily in your charts. Nonetheless, it's the hardest time of year to be in the market. That's why we want to practice it. If you can do things this time of the year, we get in the fall-winter trading zone where things are cleaner, move longer, are bigger and more beautiful. That's great. That's what we live for. So we'll practice during the crappy times so that when it's the beautiful time of year, we can really clean up. Okay, so we see things moving down. We're just waiting to see how TLT sorts itself out. Nothing for us to do right now. Lastly, go back to the weekly, go to gold. Here's where we see the big pullback. We had that beautiful weekly vertical crossover in gold back on the 7th. Didn't have an immediate jumping in point. Gold went up the following 3 weeks. This last week, hammering up. And of course, what's it started the week off? Down almost 2%. Price percent oscillator still heading up, not nearly as strong as it had been. Derivative oscillators about flat. Go to the 2-day chart. What do we see there? Whoo! So a big cooling off Thursday and Friday of this prior week, right there at the trend line, the 2-day trend line, and then starting off on Monday, big down, well, not a huge down candle, but a solid red down candle, first day of this latest 2-day candle. Price percent oscillator heading down, still in the green, hasn't crossed over, but heading down. Derivative oscillator losing momentum. And take a check at the 4-hour chart. Now, of course, it ended up crossing over, going down back on Thursday. The price percent oscillator did. What we had, things were sort of hitting a bottom right at the 132.50 mark or so. Then, of course, started the day off hammering down and even further down in the afternoon. Like I said, down almost 2%, 1.94%. Derivative oscillator heading down, gaining lots of downward momentum. Price percent oscillator heading down. Blew through that 2-day trend line. Now, of course, our jumping in point on gold was after the crossover going up on Thursday, the 20th of June. And of course, our jumping in point somewhere around the 128, about 129. And of course, we hit a high of highs there at 135.55, and then things started cooling off. And of course, even if you would have gotten out somewhere after that crossover on the 4-hour chart, that would have been somewhere around the 133 mark or so. But again, what we saw happening as we really looked, and again, we focus on those 2-day charts when we saw that real pullback on Thursday and Friday, things starting to weaken, and then we saw the derivative oscillator had peaked all the way back when, well, prices actually peaked on the 26th, but the derivative oscillator started degenerating. And then, of course, we saw our Heikin Ashi candlesticks starting to lose power. And we look at that weekly chart. And, of course, we see this week starting off with that weakness. So keep your eye on gold. Doesn't mean these gold opportunities have gone. Not at all. In fact, you know what I was hoping for was an immediate recross bottoming here around the 132.50 mark, and then moving back up. That was not to be. Gold may very well go down and retest somewhere around the 130.50, 130 mark. If it bounces off that and starts heading up, then of course we will definitely be looking for that. As long as the 2-day and the weekly stay in confirmed up moves, that 4-hour chart rotates back over going up for us, that's when we're going to pile in on what we hope to be a very successful up trade in gold, if that appears. Folks, that's where we are as we end the day on Monday. Go into Tuesday. Hope that you are with us. Hope that you are motivated and excited, that you are filling out those daily market worksheets, weekly market worksheets, trade worksheets, that you are really keeping up on what is going on. This is not a get-rich-quick scheme. This is a get-rich program. That will only happen if you devote the time and energy necessary, the practice trades, learn how this works, put together all the knowledge you have that you've learned from us and in the world, everywhere else you've trained, everything else you've read, develop your technique, tweak out what we do and everything else you've learned. And only when you've gotten good at this and can do it time after time after time successfully, then and only then might you consider actually putting some of your own money into it. That's your own call. We're not a stock calling service. We're an education firm, but we appreciate you being with us. Support us, help us out, become a Patreon member, sign up for the daily market review. Just go to chartingwealth.com, put in your name, email address. We'll put you on the list. List is never spammed, never shared. It's just for us to share things with you. And of course, if you haven't purchased our book, we're in the 11th printing. Charting Your Way to Wealth is available. Follow the link in the show notes. If you live overseas, email us, cw@chartingwealth.com. We will send you a PayPal invoice. Pay that. We'll send your book anywhere in the world. We've sent them all the way to Sub-Saharan Africa, South America, Central America, Europe, you name it, we'll get it to you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.